SGX posted a record 357 million Singaporean dollar half-year profit in fiscal year 2026 as trading and foreign exchange volumes surged. But can inflows and IPO momentum hold as margins tighten? Jason Sao of CJS International and Lorraine of Morningstar are here to discuss this. Welcome, Jason and Lorraine. Let's begin with a bit of a background. What's driving SGX's record profits and higher trading now? Jason?
I think if you look at where the SGX market is, there's a lot of activities happening, right? Daily liquidity has surged to close to 2 billion this year. And then, really trading volume, the pickup and interest from investors all across from institutional to retail investors, all the interest is really driving the higher liquidity in the market.
But how long can the safe haven rally in Singapore last? Lorraine, would you like to take on this question?
Well, given everything that's been going on globally with the war on Iran and the seeming uncertainty as to how long that would last, I think that would keep interest in Singapore assets, mainly because of the Sing dollar is very stable. It's known to be a safe haven asset for those reasons. Security, obviously, in Singapore is an attraction to many. I think there are obviously some views that, given everything that's going on with the Middle East, that there would probably lead to a prolonged inflow of capital that may come, in fact, to Singapore. So we would imagine that Singapore's defensive status will be extended and prolonged for some time.
I think we're just at the start of a rally, right? If we anchor all things back to the fundamental discussion, right? Valuations are not expensive today. There are earnings growth in the market. And, these factors are really what is anchoring the interest in the market. It looks like there's still a long way to go, right? Plus, I think the government has started supporting more fund managers to invest in the local market. Retail is coming back to put more capital, especially into the small mid-cap companies. We don't think, first, the market is overvalued. And secondly, higher trading liquidity will obviously lead to better price discovery.
Which brings me to the question, what risks come with this big jump in market liquidity?
I think that's a benefit to the Singapore markets that the MAS has looked into ways and means of improving stock trading liquidity. For one thing, and the activity of the SGX, for example, I think that basically to have a healthy and capital market environment for companies that may need to raise equity, for example, so that the more liquid the market, the more active it is. It actually helps with valuations in the long run. I actually feel that if you have a more liquid, active market, it actually is healthier in the sense that it should reduce risks associated with illiquid trades, meaning that it's sometimes difficult to get out to sell shares, in particular assets that may be less liquid. And if you have equities, for example, where it doesn't have that much of a trading volume on a daily basis, if somebody wants to sell or somebody tries to buy, it can create a lot more volatility in share prices. So therefore, that activity and the liquidity does help. One of the key things that we would watch out for, obviously, is that Singapore still needs to build a hinterland, or rather a good pipeline of larger company IPOs to sustain growth in the market. So in essence, I think that's important for the long-term attractiveness of Singapore as an exchange for people to list it.
I think it's not the market liquidity jump that we are concerned. I think more the macro factors as well as company earnings ahead. The war in Iran clearly has an impact on the bond yields, and of course that will have an impact on sectors like REITs as well. I think what we want to look out for is inflation being contained, bond yields staying muted, or perhaps even have room to come down. As well as earnings outlook ahead for companies. I think if the earnings trajectory is strong, we won't be so worried. In fact, we think that buyers are all ready to deploy excess capital on the sidelines. to really participate in this market rally. So we don't think that market is at a peak or bubble, but of course there are risks that we need to watch out for, and inflation and bond yields are clearly some of the things, and the macro factors around us.
Thank you so much for sharing your insights, Jason and Lorraine. Hope you can both join us again soon.
Thank you so much.
All right, thank you.
Once again, those were Jason Saw, Group Head of Investment Banking at SGX International, and Lorraine Tan, Director of Equity Research of Asia at Morningstar. For more news, visit sbr.com.sg.